Hello, traders. It's 8:01 a.m. Chicago time on Friday. Happy Friday, everyone. The 4th of December, 2020. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're going to dive right in and look at the overall summary of the market as we stand here. A summary is provided by Convergent Trading, convergenttrading.com. This morning, risk allocation is it's the overall overnight posture is risk on, mildly risk on. We see that some of the equities are in the mid, in the 50 to 70 basis point range. The DAX is lagging behind a little bit. Overall, not much to say. Looks like the DAX, where are you, DAX? Yeah, the DAX is still down 6 points, which is about a half a rotation. Crude oil is also up, so money's moving into that. Money's being pulled out of the 10-year notes, the 30-year bond. The Bund is holding steady. The Bund is actually unchanged on the session today. The dollar sinking even more. The laggards today really are the bonds, the notes, and the yen, along with a little bit of DAX. The current dollar is trading at $90.74.5, up 2.5 cents or 0.03. So slightly has popped a little bit. Of course, the big news this morning, as I'm sure you're aware, is the non-farm payrolls. Non-farm payrolls were expected at 469,000, came in at 245,000. Private payrolls expected at 589,000, came in at 344. As the country deals with the U.S. deals with this resurgence of COVID. And that's basically where we stand. The overall view is that the equity markets in the U.S. rose with world shares buoyed by growing prospects of U.S. economic stimulus package and hopes of vaccine-led economic recovery. Increased appetite for riskier assets pushed the dollar towards its worst week in a month, while gold steadied. Oil prices jumped after OPEC Plus agreed to increase the supply but keep bulk of the supply cut intact. And then, of course, we got the employment report. That summary is from Refinitiv of Thomson Reuters. And so that's where we stand. The overnight inventory currently at the time of the snapshot, it's 140,000. Since then, it's 148,000. 14.5 points. Yesterday was 17. And the overnight inventory is 97.75% long this morning with a double distribution profile. We'll go over that in a minute. Again, you can get this report by following Conv Trading, Convergent Trading, Conv Trading, CONV Trading on Twitter, twitter.com/Conv Trading. That's where we stand. Of course, the statistics shown on here are historical, and always past performance is not necessarily indicative of future results. Let's look at what was expected yesterday versus what we got yesterday. Pretty straightforward. The overnight session pushed the prior day's high, held the VWAP, and set us up for really the easiest path forward for the session would be the long. So the expectation is a push, a consolidation on the open, and then a push higher towards 36.85. That was the expectation in the basically a trend day up, new all-time highs. The secondary is a push higher, potentially up into 72, the prior day's high, and then a drop through the 36.61, and then a consolidation beneath for a finish around 36.61. That's the MC point of control of this area. Here's what we actually got. Come on. My charts are not responding. 1 second. Let me shut some things down. You know, you spend $2,000 on a laptop, you think you're going to get a PC desktop equivalent, but there's always something. Here's what we got. We got this tight consolidation. We had an open auction in range in value, tested up to the prior day's high, to the tick, and just chopped around and finally started taking off. We finally get what I call an impulse up, and then we push on that impulse up. We push, pull back, and put in a double top. Basically at yesterday's the prior sessions, or the not the prior sessions high, because that was tested back here, the high from 2 days ago, and then it drops right off. And it seems to me, because it keeps swinging across the opening swing, it seems to me like it is just choppy. It would be a very, very choppy session. We ended up pushing to 36.82. Remember, I was looking for open auction, then consolidation, and then a push into 36.85. And what it did is it pushed to 82. But yesterday afternoon was very much news driven. From this point forward, it was just a news event after news event. The stimulus, then you had the Pfizer news, which is what this is. This was the Pfizer announcement that due to logistics, they do not think they'll hit the targeted dates for distribution of the vaccine, and the market basically made the entire day's range right there. Big move, 36.82 for the current volatility, 36.82 to 36.56. It's 26 points, which seems really huge, but the volatility and the ranges have collapsed quite a bit. Then we get a pullback to mid and VWAP up here, a continuation trade. So we have impulse, pullback, continuation, and then the start of a reversal into the close. Remember, I was looking for 61, a test of 61 here, and we got that. So yesterday, we hit the scenario 1 target. We missed it by 3 points. I was looking for 85, we got 82, and then we hit the scenario 2 target of 61 and beyond. I was looking for down to 56, and we got 55 and a quarter. Just a mess of a day, really, yesterday. So this is really what we got. If you look at the delta kind of played along with price. When price was above the open, the delta remained above the open. When price fell below the open, the delta went negative, and the rotations were really playing both sides as well. Yesterday was really a balancing day with a skew higher, and we did manage to break the one-time framing down. So we broke the high of the prior day, so we put in a higher high, higher low, and today it's a question of where do we go. We're going into the weekend. It's a Friday. There's still the stimulus action on deck, and we have the effect of the non-farm payrolls as well this morning as we come into the open. So that's where we stand. Let's dig right into what's expected for today. Oh, hang on. Part of the review, of course. The overnight session. The overnight session now has 150,000. Here's the Pfizer news, this bar right here. And then since then, we've basically held the mid and VWAP all the way up. We're testing mid again right here, and we've created a double distribution profile, a clear lower distribution, an upper distribution with the cutoff being right here in the 74, 73, 74 area. We're just below it. That's the low volume node. This thing has 2 boxes today, an upper box and a lower box. And the range, as you see with these stock zones, these thick stock zones, it's respected them overnight. The stock zone's around 78, and the lower stock zone's at 67 with 64 behind it. I'm expecting today to be quite choppy. I'm expecting it to be uh, a uh, a tough trade, in my opinion. We often do get a tough trade after non-farm payrolls, and today kind of adds to it with where we are. The market clearly likes to buy these lower prices and likes to push higher. So we're in an uptrend. Remember, the weekly, uh, the weekly is one time framing up, and to me, it looks like it's probably going to be a grinder today, and in the upwards direction. So here's the non-farm payroll. We're opening inside of that. We've been slumping off since before the non-farm payrolls. We're opening inside of this multi-distribution day yesterday with a point of control beneath us. The expectation is an open auction with a downward skew. We're likely to test downwards early and then consolidate and move to the upper end of the range. The value area is valid. I'm looking for it to push all the way up to the 3680-ish, which represents the key low volume node up here, tested overnight. And I'm looking for it to just hold steady in here. I'm not looking for today, in my opinion, is a scalping day. I'm not looking for directional bias. However, if we do get it, I'm prepared to play along, and that's okay too. Open auction that pushes higher into 3680, pulls back, consolidates down in the middle, and then squeezes higher and starts to push yesterday's high into 85, attaining that 85 before we come back into the open, and towards the open. These are the two key scenarios. Like I said, of course we could sell off, and that would actually create a little more opportunity for us to fall below this 67, 64 area and start moving down. That would create a faster market and cleaner moves, in my opinion. But for today, I would say temper your expectations, and shrink the risk and reward on trades. Keep that R factor in balance in your trades, but just chill with the expectations, unless, of course, news comes along and blows this thing out of the water. So that's what we're looking at. Today is Friday. It is like Friday. I don't put the graphic up anymore. It's an old graphic, and I haven't done a new one. I haven't had a new one done, but it's like Friday. I'd appreciate you hitting the like button on YouTube before you head out. That helps people find the channel and hopefully find some solid information to trade or base their trading on. Good luck today, and I'll catch you on Monday morning. Take care.